everyone, welcome back to this weekly market update. So it's a late video for today. So however, just want to focus on certain points because market has been rebounding here and there, going a bit sideways even though the volatility is quite high, but it's never see any successfully breakout or breakdown event at this point of time. So what happened on last Friday, we can see that Dow actually pop up more than 600 points on the Friday rally. But the thing is that you'll be puzzled because after all, market is still actually on the downside. Why do we say so? Because based on the trend, right, we can see that it's still on the downtrend. It's just that the market has been uh, trading on the sideway. I can say that it's between 30,000 to 31,300. All right, it's bouncing between here and there. So we can clear cut see that this channel, downtrend channel, is quite clear structured to everyone who actually know how to do technical perspective. All right, but the thing is that always remember these ultimate questions to yourself is that we are actually still dealing on the inflation rate, dealing on the interest rate hike. All right, so last Friday we can see that I think there's a data on this CPI, whereby it's 1% higher than what we expected. However, this data came out, but then the market rallied. So that is like kind of a contradicting things, right? Because if let's say the data is way better, it means that it gives Fed more reason to hike the rate. All right, and that is why I say during my Telegram, I say that with that kind of CPI data, we may foresee 100 basis point rate high. As you can see right now, the news from CNBC, they also state that stock rally on Friday in response to a new round of banking earnings. Banks earnings, like I mentioned last week, there's a banks start kickoff of the bank's earning, and I think Citibanks actually performed extremely well. They kept up around 12% on last Friday itself. So this actually gives a promising economic data as a fear of 100 basis point rate hike for Fed to to increase, to subdue the raising of the inflation. All right, to subsidize it. All right, so this, but the thing is that since the market fear of this 100 basis point, why it pop up? All right, it might be pop up due to people foreseeing that the earnings report for the coming weeks or the coming quarter, this quarter, will be tend to be at a good side. But ultimately, rate is going to hike 75 basis point. I think it's the base. 100 basis points will be the surprise to the market. Not to be surprised, 100 basis point is possible. As you can see, the Bank of Canada actually surprised with 100 basis point last Friday. All right, not last Friday, but last week. All right, I think this is one of the banks, one of the country that actually give 100 basis point. Not only to that, I think there's other country as well. All right, so not be surprised if let's say Fed is going to hit 100 basis point. All right, so this is what is happened. Out of the four banks announced earnings result, I guess Citigroup is the one that posed the strongest compared to JP Morgan and the rest. All right, so that is what happened on last Friday. And not only that, right, I think the tech stock, the Meta platform, sales stocks, Amazon actually jumped as well. Netflix saw 8.2%. This, to be frank, if you go into individual counter, right, you can see that actually they drop badly. All right, so 8.2%, 10% jump is not really that fantastic after all, if you base on the chart's perspective. So don't be, uh, you know, so-called blindfolded by this percentage data here. Go more in depth and you will know what is happening. So pin interest surge heavily. I think right now fund houses start to look back to this uh technology sector because they want to do some value investing, some stock picking, bottom line picking, pick it up, right? So they might be slowly enter into the market, but overall, if the market is that bad, I guess there will be more room for it to come down as well. All right, so that is one thing to take note. So for the coming week, earnings continue with even bigger catalyst for stocks after the market wow right on the rate fear. All right, so coming weeks, I think there is earnings report on the Tesla. Continue with Bank of America, Goldman Sachs, but I think the most important thing is that Netflix, J&J, all the big company, Tesla, I think everyone is eyeing on it. How are they performing? I think the earnings report should come in quite a decent positive side. All right, come in quite a decent positive side. But overall, uh, Elon Musk is still having the lawsuit case with Twitter. I guess this will actually badly affected on Twitter, but not on Tesla itself. All right, so this is what happened on the coming week. Nothing much. All right, so there's a jump of the CPI, which I just mentioned. This is what happened on last week. Coming week, we are expect on the earnings, focus on the earnings, focus on what is the rate hike for the coming week. I mean the following week. All right, so inflation will likely to be tamed next year when rate hikes start to work. So because they start having rate hikes, 75 basis point, 50 basis point, but it need time for the market to sit in, right? So we can't see the impact that grateful. But if let's say Fed miss out this part because they just raised a couple of rate and they see the CPI is still at the high side, mainly is due to the consumer purchase, right, might be due to the high price of the oil. That's why oil is still a necessary stuff, right? Contribute to the high CPI. We might not know, but if let's say they overlook this and keep continue to do the rate hike, it might turn sour for the whole overall market. All right, so for the chart, based on the chart perspective, if you want to be on the safe side, I guess it's much reasonable for you to wait for it for the higher pullback for it to short instead. All right, so this is what said previously. I think on 25th June. Right now we are on the 17th July. All right, so we are still waiting for a rebound. We can short, but right now we are actually playing in this range. All right, we are playing within this range, inside this range. So it's like quite a bit tight. So I will suggest that when you reach the high, short it down, reach the bottom, buy it up. All right, and with a tight stop loss to protect ourselves. All right, so JP Morgan actually have one some saying also. He said that the economy continue to grow and both the jobs market and consumer spending. All right, both sides. But then I think with geopolitical tensions, high inflations, warning consumers' confidence. All right, so I think after all, mm, very likely to have negative consequences on the global economy. If let's say the quantitative tightening continue. All right, so he warned on that. So basically, it's like I don't know, one positive, one negative. What he's trying to say. All right, next thing, if let's say I've been saying on solar, right, previously, but what causes solar stock to plunge on last week is basically because, right, I think there is one from Senate leadership, this guy, right? So he said that he would not support an economy package that include new federal spending on a clean energy that causes few of the solar shares to drop last week or last Friday, like 10%, all this. So ultimately, right, by right it should be good, but because of political, uh, government stuff related that cause the market to have swing here and there. All right, so I'm not sure whether will Biden override this and then pump in more money for the climate support or not. Otherwise, it should be good side, but due to this, causes the market to come down. All right, so this is can't be checked on fundamental side, can't be checked on the technical perspective. After all, you need to do your risk management. All right, so earnings calendar, which I mentioned. So let's see some chart for this week. For Dow, which I mentioned, we are trading within this range. So I am trying to say that we can see on last Friday, Thursday, there's a huge jump. So mainly due to the earnings report. So when we are trading in the earnings season, right, just be careful. It's very volatile. If you want to long, wait for some pullback to long it up. But if let's say the first last week earnings report from the bank is not that bad, all right, not that bad, the market is still performing. I think the market may continue to ride with the earnings report coming in. All right, but however, if let's say you are more concerned, stay away, wait for it to bounce back near to the Fed height. 100 basis point might be on the table, and then you shut it down with a tight stop loss. All right, let's go into the next counter, gold. All right, I've not been talking about gold for quite a while, so let's take a look at gold. What can we see from gold? From a gold really perspective, this is what I say right previously. So sorry. All right, so we can see that immediate support 1760, we break. All right, our next pivot 1670. Once it break, we can see it's like a double top. All right, if you see that, it's like a double top. Okay, I'm so sorry. All right, one top, two overall top. All right, and then we may see 1670. All right, even though we know double top, we might take the T image, okay, somewhere here, but we will see 160 as the first support first. Once it break, then we will go to the next 1450. All right, 1450. Remember, next range will be 1450. Let's take a look. I think this is standard previous support or resistance. That's why I still remember 1450. I didn't draw, just naked eyes. 1450 is somewhere here. All right, cool. Cool. Can we see that? All right, so it's been supported. So 1450 will be the next. Okay, if let's say 1670 give way. All right, so this is what you have to take note. Uh, Next thing, couple of things to one more thing to share. Hold on. All right, so this is what I mentioned previously. 10. All right, so this is what I say. By right, it should be actually at the upside, but it came down on a weekly chart, mainly due to the news. All right, mainly due to the news. Next thing, we are actually on the China A50. By right, it should be good. All right, we can see it's a pullback. It's a pullback. After all, after a few weeks of riding up, one strong candle come down, might be due to the COVID cases resurface. All right, so might be due to the regulations, like example 10 cents already. I think China has some say. They will still continue to work on it. So it's not one clear cut that they will stay off from the regulations on the Chinese tech company itself. All right, so but however, we can see that we are still on the upside trend. All right, upside trend. Then we will see 13640, this support area. Hopefully it can hold there. So if let's say we can hold there, let's delete something, delete something. Okay, so this should be eyeing around here. Okay, so we must see it shouldn't break this first ascending uptrend sub since 1 second. All right, since 2014. All right, so this shouldn't break. All right, break and close below is significant a bad sign. All right, so we are monitoring closely on China A50. Next thing, just to share with you guys, let's take a look at commodities. Let's take a look at Brent. All right, so what happens to I just use US oil also can WTI. Okay, so let's see. So WTI, I know that it has been dropping crazily over the weeks, right? But we came to the first support level on the daily chart, 200 days moving average. All right, one nice candle. All right, one nice candle. Shoot back. All right, and then followed by a positive candle on the day chart. All right, so for oil, we know that geopolitical is still there. Ultimately, it might be fluctuating between this price because we are still at the high side for oil. Right now, there's a significant support. So I am more on the upside at this point with just one indicator supporting. With just one indicator supporting, guys. All right. So if you don't feel comfortable, but if you want to ride with the trend, it's a good point for you to enter, play some stop loss below. All right. So otherwise, if you want to be more on the safe side, let's look at the longer perspective on the weekly chart. Okay, we can wait for the first Fibonacci to come in play, which is the 61.8%, around $86, or otherwise you can wait for it to ride back to previous resistance level, which is around $76. Alright, so this is what I'm looking. So is this here more conservative? This is more aggressive. Alright, based on one indicator. So subjective to individual, but I'm still on the upside after all for oil at this point of time. Okay, there's one very interesting which I want to say. There's one very interesting which I want to say. Let me take a look, show you guys, which I just realized over the my research. We can see what is happening to oil when you look back at global financial crisis, because everyone say that right now this plunge is something related to global financial crisis. We know that we have a good ride, all right, all the way 2007, all the way since I think dot-com bubble, we ride all the way up to 2008. We know that it's over uh, bullish, all right, at that point of time, and then it just dropped all the way since July 2008. Then we kick off the global financial crisis. So this is something similar. If you realize, all right, can you see we go all the way up, then we come down. All right, but take note, if you go for S&P 500, S&P 500, okay, so and then let me just remove everything first. S&P 500, all right, and then I just plug in comparison to my copper. Alright, why I bring up copper? Because copper, right? I'm not using oil, I'm using copper. Show you guys copper first. Because copper actually stand for whether whether the economy is improving or not. True or not? This is copper. Previously I said we can see that copper is dropping crazily, right? Because why? If let's say the economy is doing good, we need copper for the building, the structure, right? For the country to grow. But if let's say copper is dropping, no one want copper, the demand is low, the economic growth is low as well. So we can use copper to foresee, do some comparison between copper at S&P 500 how it performs. So we can see from 2008 that we hit the global financial crisis all the way to 2009, copper actually has one deep, steep right down. We can see this is the weekly chart, gentlemen. All right. Can we see? It's a deep right down all the way. So we can see that from copper. Can we see something similar? Deep right down. All right. So this might give you some interest comparing to S&P 500 that it may not end that fast or that soon yet. Sorry, guys. 1 second. All right, so we just take a look, do some comparison. So we can see this is the chart overlay. All right, the brown line is actually the S&P 500. We can see the market try to go sideways before it actually plumb, right? So we can see, zoom a little bit more. Can you see? All right, so the market tried to stagnate, but when the copper actually drop belly, the index drop all the way as well. Can you see that? So right now, where are we at the current moment? Okay, it's tandem. Market drop, copper drop. Right now, copper have a steep drop. Sooner or later, I don't think S&P will hang it there for any bullish sign. All right, I don't see any bullish sign for S&P 500. I think they might continue to go sideways before the next drop. Once it break this level, we may see the next drop. So tune into S&P 500, see where is the lower bottom here, draw one line. Once it break, it may continue to drop. Continue to monitor copper closely. I think there's a high volume coming in with sharp drop. All right, so we may see some rebound back, and we may see some rebound back due to the earnings report, but ultimately, this steep drop is not stopping. All right, it's not stopping. All right, so where will we see copper next? Let me just remove everything. Where will we see copper next? Okay, so this is copper. Let's remove some. Okay. So let's remove some. All right. So based on Fibonacci, we can see that from 2020, the COVID cases, right? After that, he had been riding up. So right now, we actually touched the 38.2%, the first support level using the Fibonacci level. True or not? All right, this is the weekly chart, gentlemen. So if let's say we might have some rebound, all right, some flag just like this flag before the next ride, we may have some flag pull it back to the 50% before the next ride. All right, so where are we eyeing? If let's say tightening is continue, inflation rate is high, we may see 23% Fibonacci to be taken at $2.80, but definitely the round figure $3 must break first. $3 must break, we will see 280. If we can't hang it there, we may revisit the way low during the COVID crisis. All right, so this is my view for copper. We are still more on the downside. All right, so that's all for this week weekly market update. Hopefully you guys enjoy, have some insight how to look at the overall pictures of the market itself. Do watch out, 100 basis point might be coming up soon. All right, thank you guys. Enjoy your weekend. Bye bye.